You might have noticed that I've been very bearish on this channel recently. I even got a lot of comments, please make a bit more positive analyses. And so I said, no, I'm rather renaming this channel from Gerhard Bitcoin Strategy to Bearhard Bitcoin Strategy. Now, I hope you took some of these analyses seriously. I hope that you at least delevered to a degree, because what's currently selling off most? It's the things that have been hyped the most. Monet is down 26%. Zcash, apparently the next Bitcoin, is down 21%. The only thing that's currently up is a heavily manipulated micro meme coin called Pippin. But that's going to turn around very soon as well. We are, of course, making money during all of that trouble. We are following moving averages. So we are short already since the end of October. We have been betting on falling prices because we are below the 125-day simple moving average and the 44-day simple moving average. Those are the moving averages that historically work the best, right? Buying and holding is the line here in white. Trading long and short according to the moving average, the 44-day, that's the line here in turquoise. Every horizontal line is a 10x in terms of performance. Here's the same for the 125-day SMA. So we are quite happy, so to speak. It's of course not nice that everybody around us is suffering, but at least we are nicely protected. And so there's a good chance that this will continue, right? The market is still, even after this sell-off, 38% in net unrealized profit. If you are not currently in profit right now, then probably your time horizon has been below the average market participant. You have been too much of a short-term trader. You haven't bought the dips at the end of 2022. The average cost basis of the entire market is currently at $56,000. And this is very likely the level we are going to see. Potentially, we're even going below the long-term holder realized price, which is currently at $36,000. We have hit that level at the end of every bear market in the past. We are just entering this bear market now, right? This is just a first taste of what's going to come. The big hype around Ethereum treasury companies has died down. There's no more purchases by those entities. The Bitcoin treasury companies have also slowed down their purchases. And the ETFs for Bitcoin have even distributed recently. But really, the main source of the sell-off is the long-term holders pushing coins to the market. The ETFs don't really move that much. They are, of course, long-term a positive impact on price development because they still continue to accumulate. But really, when the long-term holders decide to sell, that's when you want to listen. They've still got the vast majority of Bitcoin. The treasury companies plus the ETFs, they hold in total maybe 2.5 million Bitcoin. And we've got roughly 20 million floating around, right? The vast majority is still held by the cypherpunks of this world. And so the market is going more and more risk off. We've actually seen this already for several years, as in the Bitcoin dominance tended to go up. And I do expect this to accelerate into the year 2026. Whenever there's a bear market, we tend to see Bitcoin dominance rise as well, as we've seen in 2018. Of course, the stable coin dominance is likely going to rise even further. This is the least risky of the quote-unquote crypto assets, and there is an inverse correlation between the Bitcoin price and the stablecoin dominance. Historically, the stablecoin dominance tended to peak at 16%. We are currently at a value close to 10%. And if we are going up to 16%, a Bitcoin price close to the realized price, potentially even close to the long-term holder realized price, is definitely on the cards again. Just have a look at how nicely this inversely correlates, right? We are not yet at peak fear. We could go much more risk off. Historically, we have been much more risk off. And so the market is waking up. It's waking up that Bitcoin really is a risk on asset, that it is highly correlated with the Nasdaq 100. So that's technology stocks here at the bottom. Whenever traditional risk on assets crash, Bitcoin tends to go down as well. This here is the COVID crash. Whenever technology stocks tend to peak, Bitcoin peaks as well. So those two assets tend to move in the same direction at the same time. And probably people are waking up that those risk-on assets are currently extremely expensive. This is the Nasdaq 100 relative to US money supply. And if we really see an AI bubble popping here, if we actually have seen overinvestment in AI data centers, as we saw overinvestment into internet infrastructure in the year 2000, then that's going to be extremely bad for Bitcoin. The internet is of course extremely important today, and very likely artificial intelligence will be very important in 20 years as well. But that doesn't mean we can't have overinvestment every now and then. And if we do see that current valuations are inflated and that we shouldn't have bought and built that many GPUs, then a decline of technology stocks by 86% is definitely possible. And the problem is that Bitcoin has never really seen a real crisis. Bitcoin got born in 2009 at the height of the global financial crisis. It then started to get first pricing 1.5 years after that. And if tech stocks really were to fall that much, where will we then get with the Bitcoin price? It's a big question. Nobody knows. It's uncharted territory. People are waking up that too much risk has been taken. And to a degree, crypto can be a leading indicator because it is the most risk on of the assets. If people try to de-risk, they tend to sell the thing that went up the most during a bull market. This is the historical Shiller PE ratio. So this is a very long-term chart. Price to earnings ratios have rarely been that high. This again was the .com peak. And I'm not saying that it's today where the bubble is popping. I'm simply saying that days like today are just a canary in the coal mine. This is likely a first warning sign of what's about to come. Question is always, who's the marginal buyer? It's not the treasury companies. It's definitely not the ETFs. And the long-term holders do everything but buy. They are dumping on everybody because they're still realizing profit. Believe it or not. They are still in profit. They are not taking advantage of those high prices. Now, very few crypto YouTubers are willing to share their own performance. I've created a copy trading vault where I traded for the community members, the premium members of this channel, and the performance is shown here at the top. So we're trying to achieve performance independent of the macro environment. We are up so far 17.6% since July of this year, while Bitcoin during the same time frame went down by more than 22%. So we might be going sideways in Bitcoin, we are making money, we are going down, we keep our money. And the way we achieve this is with relative valuation trades. So we bet on altcoins to underperform that tend to have a rising supply, where the supply goes up faster than the demand. That then leads to those altcoins just long-term underperform versus the general market. So this is now Balancer relative to Ethereum. That's the Balancer supply chart. And we can simply just turn this around. So we just bet on Balancer going down relative to Ethereum. That's how we can make money in a market that overall might still be going down. But if the thing that we short goes down even further and at a quicker rate, that's then how we profit. And so there are two ways to benefit from this. You can simply just copy trade whatever I do. I always announce every trade that I make to the premium members in a channel in real time. Or you can join the next automated copy trading vault that will open again for deposits in January of 2026. That copy trading vault will be available to all annual subscribers. So I can simply start off with the monthly membership. And if you're starting to make first money with manual trading, you can also then swap to automated trading via yearly membership. I will, by the way, share my favorite trade once you join. So that's not Balancer anymore. It's something else. I will share that trade even if you just join on the monthly membership. And if you make money with that trade, then of course that's great. If you don't make money though, then I will refund the membership to you. So there's really no risk in just trying it out. If you don't make money with that first trade, I'll just send the $125 back. A link to premium will pop up on the screen. It should be somewhere around here. Looking forward to seeing you on premium. And again, thanks for watching. Cheers.